Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, let's do an update on Chinese stocks. As you know, I own Alibaba Stock and JD.com, but as the situation with Chinese stocks continues to be quite complicated, obviously we have interesting articles coming out. For example, this one, from which I took the title basically of the video. This is your final warning. Chinese stocks listed in the US are dangerous to hold. So this is your final warning on Alibaba stock, on JD, on Tencent, Baidu, okay? It's your final warning. Obviously, it continues to go on like we have seen the situation with Didi. We are now seeing the situation with educational and technology stocks. Okay, so Beijing looks like the crackdown is hitting those kind of companies as well. And then obviously, like last week, Cathie Wood sells China tech stocks, warning of a valuation reset. It looks like that literally Chinese stocks, if you buy Chinese stocks today, you are an idiot, according to articles, according to what personalities big famous personalities are doing. So in today's video guys, I want to tell you what I actually think about that and what am I gonna do with my holdings. The only thing I ask you guys is please leave me an early like, it's very important and I thank you for it, and subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so first of all, let's start with the Cathie Wood situation. Okay, so Cathie Wood sells China tech stocks, warning of a valuation reset. Now, this warning, and she sold China tech stocks basically July 14th, 2021. Okay, this warning of a valuation reset. A valuation reset which, as we can see, actually is going on since October. And if we just take a look at what Alibaba, for example, has done since October, we are down 36.2%. So, valuation reset, when? Now or basically in October? So that's the first question that I have. The next interesting thing that I want to take a look actually is here we have those kind of interesting websites where we can see it's pretty interesting because ARK Invest is transparent with what they're doing. So we have all the interesting data, right, on what they're buying and selling. And this is JD.com. As we know, Cathie Wood and ARK used to hold JD.com. Anyway, let's take a look at when they bought and sold stocks, because we can have an idea on what they are doing. According to this data, quarter after quarter since 2017, we can see that ARK Invest started to basically purchase JD.com stocks over there. Okay, August 2017, and all the greens are buy positions. Okay, so 22,000 stocks, more than 500,000, another 500,000, more than 500,000, 2 million. So jumping on around 42 average price to then sell everything at $24 per share. Okay, so they have been buying for couple of years actually to then sell everything literally a couple of quarters later at half the price. Okay, and as you can see, this 3 million selling position was basically the kind of bottom for JD back then. Okay, since then, boom, the stock continued to move higher, and then they started to buy again basically at around $34 in 2020. And they have been piling up for the entire 2020. The last 3 million shares of JD.com has been bought basically at all-time high, okay, almost. And now this needs to be updated, obviously, with Q2, but they are saying that they are selling Chinese tech. Okay, so here I expect another red bar saying that they are basically selling almost the entire positions. And that's interesting because why the hell are you buying 3 million shares at all-time high to then sell by basically mourning about a valuation reset 40% lower. And that's another interesting bit that actually it's great to see, okay? It's brilliant, it's smart. According to all the social media, all the articles, this is what a true investor should do. Buying high, a all-time high, and then selling low. But anyway, that's just another thing. The same stuff could have been said for Baidu as well. I remember ARK being crazy about Baidu when the stock was literally skyrocketing into the sky. Like buying Baidu, I was seeing the buying signal at around $300 per share, 280, okay, to then come back now and say, no, you know what, we are gonna sell everything because there is a valuation reset going on, so we don't like those things anymore. Now, what do I think about that? Because the reasons here can be only two. So the first is that those guys are completely stupid, and I do not think this is the reason. The second reason is their business plan. What do I mean by that? Well, simple enough. How does ARK Invest make money? Well, by selling ETF and gaining on fees. How do you sell an ETF? Well, an ETF should be sexy, right? It should be sexy, otherwise people do not buy it. And right now, Chinese stocks are everything but sexy. Actually, lots and lots of articles and people think that is complete trash. Okay, so obviously you don't want to sell ETFs with Chinese stocks in. So this, in my opinion, is the real reason. But does that mean that it is a smart investment move? Well, I don't think so. Despite all the problems, despite all the regulations, crackdown, the listing, articles, blah, 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 I am not selling Alibaba. I am not selling JD. Simply because of a risk-reward option. At the moment, at this very low price, I'm basically down 5% on Alibaba and basically a break-even with JD. So my entry prices are very near to where the prices are today. And I'm thinking about, basically, if I close my eyes and think about 5-10 years' time, when China would have become the biggest economy in the world, as we can see, obviously, here they are forecasting to pass the US economy by 2028. And the middle class growth, look at that parabolic move in middle class, forecasting more than 400 million households joining the middle class in China by 2035. And Alibaba and JD, they are in the online commerce business. One is the biggest business in terms of like Amazon business plan of China, which is JD. And then you have Alibaba. The business plan is different because they do not do fulfillment. But that company, guys, in terms of what they are building, the business itself, despite all the negativity, is something incredible. And at today's prices, well, that's the valuation, basically. You have seen it. I've shown it in previous videos, so I'm not going to go through it at this point. But Alibaba is a fair price, in my opinion, conservative fair price of around $340 per share easily. Okay, easily. Today's price is 204, meaning almost 40% underpriced. And the market today is pricing a growth rate until 2025 of just 9%. And from 2025 to 2028, a 6% growth. Alibaba, which, despite this valuation, in 2020, basically, they have made 42% growth, okay, in revenues. And here we are pricing basically an average growth rate of 7%, okay, 7.5% in the coming 8 years. According to that, in my opinion, well, the risk reward makes me think that it is perfectly fine today to keep Alibaba and JD in my portfolio. Obviously, I know that there are risks, as there are risks for everything basically, but in terms of those risks and the rewards at those prices, at these particular prices, in my opinion, it makes sense to continue to hold those shares. So that's what I think about it, guys, and I hope you find the video interesting. And leave me a comment down below. Actually, tell me, what do you think about that? Are you afraid of this situation, or do you think that it will pass in the long term? Subscribe to the channel if you want, and as always guys, have a wonderful day.